This is CC Lagator back with a quick preview of Adobe earnings, which reports after the bell. Options are pricing about just under 4.5% expected move. Let's dive in. One of the first things I like to do with an earnings event is to check out how this expected move compares to some recent ones. Yeah, as you can see, this 4.3% expected move, it's kind of on the high range of the last four. There was a 6% move and a 3% move, 3% move, and only a 1% move last earnings. So it's sort of on the high end, but there's a reason for that probably, and that is that this stock is up pretty massively this year. This is a very similar setup to Oracle earlier this week. And Oracle options, I think, were pricing about, let's call it a 5% move. The stock was down a lot more than that. And a lot of this is AI hype, right? So Oracle, a lot of these older big cap tech companies are, a lot of this is resting on their advancements within artificial intelligence and adding it to their products and things like that. So that's sort of the backdrop for Adobe. So this expected move is on the high end, but there's probably reason for that. So let's just check. One of the first things I would do from an earnings trade perspective is the expiry itself, and this is a pretty pure expected move for Adobe because the options expire the next day. So this is straight up binary type potential trading where you're saying, all right, 4.3% expected move. Is this stock going to move up, down, sideways? Is it going to stay within that expected move? That's the kind of decision making you're doing. It's very binary. You can sort of throw IV out the window because this is just a pure representation of that IV. You can see the IV, 74 is it's more than double. Let's check in right away on selling the move. Neutral strategies, 1 day expiry, practically 0 DTE. And first thing we'll look at is an iron condor. As you can see, over the last week or so, the stock has been sideways. However, as you can see, there's been a run up into earnings. It's come off a little bit in the last few days. And obviously, as mentioned, there's been a big run higher in this stock. So doing a 1 day iron condor at the expected move, in this case, again, very binary. This stock either moves less than $25 or more than $25 tomorrow, but this is non-directional. This is saying I am okay with risking almost 50-50, but let's call it 260 to make 240, and you have a slightly higher than average chance of that occurring, right? With the probability of profit, that's straight from the deltas of all these options. Well, let's look at bearish trades. And so this is kind of interesting because you've got what happened with Oracle the other day is Oracle's setup was sort of similar. I think it was higher, closer to its highs. And it basically took out where the expected move was down about 5% and went much, much lower. So let's look at a couple of put spreads and compare those, for those that think something similar might happen. So in this case, we have the at the money put spread. That is buying the at the money put, which is 552.5 at the moment, and then selling a put at the expected move, or at or near the expected move. And this establishes a break even about $9 lower in the stock at 543.87. You can see it both on the card and here. Looking at the details, what you're doing is you're buying a pretty expensive at the money put, but then you're financing that with the sale of the 530 put at $5. And then the last thing I want to look at is a different time frame, not necessarily a binary trade just on earnings just expiring tomorrow, but let's go out to, let's say, November. And I think buying time here makes a ton of sense for the potential for this stock to roll over. Again, you've kind of got to not only be bearish in this stock, if you're looking at trades like this with this sort of time frame, you kind of also have to be a little bit bearish in the market. Obviously with a catalyst event like an earnings today, Adobe could defy the market. I mean, Oracle's been down this week and the market has held, at least it's gone roughly sideways. So there is the potential for Adobe to go down while the market's going higher. But with a big cap tech stock like this, you kind of want, if you're positioning especially bearish, you kind of want the market to help you out a little bit. But anyway, zooming in on this trade, what we see here is a break even of 537.60. What's interesting about that is, this trade is going out 2 months essentially. Your break even on this trade is inside the expected move just for this earnings event. And then you could either think about taking profits because you got your initial move and it just happened to be overnight, even though you had a 2-month trade time horizon, or you could stay in the trade. There's ways that you could kind of take off some of the risk by doing some other trades, like selling a credit put spread down below this if you got that move. There's a number of things you could do. But what's interesting about this trade is you've got this big time frame and it could benefit from the catalyst. Now, let's say you're completely wrong on this trade and the stock goes sideways, or if the stock goes sideways, you're going to get hit a little bit on vol. And that's just the case that, even 60-day vol is slightly pumped into an earnings, but it's not going to be that pumped. It's nowhere near, as we looked at before, it's nowhere near how pumped the close options are premium wise. So if the stock goes sideways on a trade like this, you've bought yourself time. You kind of will be patting yourself on the back for not doing such a binary trade that expires tomorrow and you still are in the action. If this stock goes higher and is up $25 tomorrow or up $50 tomorrow, yeah, this trade would be in trouble, but it's not going to be worthless. And then in that case, you would probably just take it off for a loss and look to, if you wanted to then fade the move higher, you could reassess at that point. So anyway, this is a number of the ways that I look at an earnings setup. The first thing I always look at is neutral setups in iron condors. If it's around a big round number, like 550 in this case, I might look at butterflies around 550. In this particular stock's case, it's so similar, the setup is so similar to what we saw earlier in the week with Oracle. I wanted to kind of dive into some bearish trades for people that think that this could do the same thing as Oracle. I obviously have no idea what Adobe is going to report. No one does, except the company itself. But the setup is very similar, so that's why I was focusing on different bearish strategies in addition to the neutral strategy. Now, obviously, if you were bullish, take everything I just said about the bearish setup and kind of reverse it, and that's all available under this bullish button. All right, thanks.